Sanusi is a tech software strategist with an extensive experience in enterprise-wide strategy, growth strategy, and cost management, currently serving as a senior strategy analyst at the only investment banking firm listed on the Nigerian Stock Exchange. Mr. Sanusi excels in analyzing data, developing actionable insights, and implementing strategic initiatives that drive business growth and profitability. With a robust educational background, Sanusi combines technical acumen with strategic pursuits, the unique blend of skill, position. Sanusi as a rising expert in the business strategy consulting space with a goal of becoming a leading voice in the industry within the next 5 years. Sanusi also has a skilled communicator known for making complex financial concepts clear and engaging this talent. This talent is particularly valuable when navigating the world of mutual funds, making Sanusi an ideal speaker for this webinar. Ladies and gentlemen, please welcome Mr. Sanusi as a facilitator talking about mutual offering collective investment schedule. Mr. Sanusi, please over to you. Thank you.
Okay, good morning, everyone. Good morning, Daniel, for the brief introduction. My name is Samiru Sanusi, as introduced by Daniel. And in my session, I'm going to be taking us through mutual fund offerings, also known as collective investment scheme. The theme of the topic today is making capital markets a lifestyle, and it would not be complete if we do not expose the participants of these sessions to some of the simple vanilla investment products that are readily available out there that each and every one of us can take advantage of. We would all agree with me that in Nigeria today, when you speak about financial services, what most people are familiar with is the regular savings account or the current account that you have readily available from every commercial banks. But aside from all these, savings account and current account that we have out there, there are simple investment products, part of which the mutual funds that we would be looking at is one of them, and encouraging each and every one of us to, pay attention and see what we can, learn from this session. So in my outline, we'll be looking at the definition of mutual funds. We'll be looking at the benefits of mutual funds. We'll be looking at the types of mutual funds. We'll be looking at some of the regulatory framework that supports the running of mutual funds. We'll be looking at the investment objectives of aligning individual financial goals to the select offerings of mutual funds that we have out there. And then I'll be concluding the session by addressing any questions after all the speakers are done with their presentation. So starting with the definition of mutual funds. Mutual funds or collective investment scheme, from the name implies, it brings together multiple investors to pool their funds for investing in a diversified portfolio. So essentially, it is another version of what we call agile. The only difference, which I'm very happy that the people we have on the call today, most of us are Yoruba and we understand what we call by agile. The difference with agile is that in agile, when you put people together to contribute their funds, they are necessarily not investing that funds. All they do is they get the funds together, they keep it in the savings, and when it is time for the person in line to collect, they aggregate all these funds and give to that person. That is essentially what agile does. The alternative or the advanced version of agile, which is now mutual funds or collective investment scheme, what it does is when you pull these funds together from various people, you don't keep it in the bank, you don't keep it under your pillow, you don't keep it under your bed. The money is being managed by a professional fund manager. So what the fund manager does is they want to maximize return on that fund. So they are not just going to keep the money idle. They'll look at some of the best performing investment instruments that aligns with the trust deed of the particular mutual fund in question and invest that funds there. So any return they get on the money, they share depending on how each of the contributor has contributed to the pool of that funds. And that's just the basic, definition of what mutual funds stands for. Now, what are the key benefits of mutual funds? It is very, very accessible. It has low entry barriers, allowing small investors to participate. So even as a student, as a worker, a junior staff, a senior staff, all array of retail investors are able to participate in mutual funds because of its low entry amount. So for as low as 1,000 naira, 2,000 naira, 5,000 naira, you can have a mutual fund account in Nigeria. And there are a couple of investment outlets that has these mutual funds services. They render it, part of which you have the United Capital as one of the Please, apologies for the break in transmission. I had to let them understand that I'm making a presentation here and the noise is really distracting. Okay, so I speak about the lower entry barrier of mutual funds that allows more investors to participate with as low as 1,000 naira. It delivers significantly higher returns than the regular, money market instruments. So for some of the mutual funds, or for some of the mutual funds that we have in Nigeria today, which we are all going to come to see, there are about 8 or 9 mutual funds. We have the ones that are domiciled in naira currency. We have the ones that are done in USD currency. That's the Eurobond, the global fixed income funds, and the likes like that. And then we have the ones that are done in naira. You have the money market fund. You have the equity fund, you have the wealth management, wealth for women fund, and the likes. These are all part of mutual funds. I will get to the part where I would have to, expatiate more on all of these things. But essentially, it delivers significantly higher returns. It has a very high liquidity and easy entry and exit. So there's this disparity whenever I'm speaking to people on how mutual funds work. It is not your regular savings account. It is an investment account. So when you go to, say, Stanbic IBTC Bank today, or you go to UBA today, and you tell them you want to open a mutual fund account, they would refer you to the investment arm of their business. So for UBA, they will refer you to United Capital PLC. For Stanbic, they will refer you to Stanbic IBTC, because these are the investment arm of these banks. So that you already have a UBA account does not automatically mean that you can invest in mutual fund. No. If you want to invest in mutual fund, you then have to proceed further to open a mutual fund account with the investment arm of the bank, which is United Capital. As an example, if we are looking at a Stanbic IBTC now, that you have a bank account of Stanbic IBTC does not mean you can invest in mutual fund. If you want to go further and invest in mutual funds, you have to open a Stanbic IBTC, asset management mutual fund account. So that allows you to invest in mutual funds or any of the area of mutual funds that they have. So you have this free entry and free exit. When you're opening the account, you are not charged any amount to open the account. When you are exiting, you are not being penalized either to exit. The difference between your savings account and a money market fund account now lies in how fast you can access these funds. So for your savings account, I can, maybe Daniel can call me and say, Sanusi, I need 2,000 naira there. Can you send it to me? I'll just log into my mobile app, do the transfer, and instantly Daniel from his end will have access to the 2,000 naira. If it is an investment account, while you are able to log into the platform to see how your funds is performing, and you're able to make liquidation, you won't get the money instantly. So it has like it's a time frame of minimum of 24 hours before you get the money back into your regular savings account. So that is one part I needed to point out, that investment account works slightly different from how your regular savings account works. But ultimately it has a high liquidity, and by high liquidity we mean that in less than 24 hours you are able to have access to your funds. In less than 48 hours you're able to have access to your funds. It is different from some investment instruments wherein if you want to have access back to your funds, it takes maybe a week, a month before you get the funds called back. So for mutual funds, they have that high liquidity ratio, because in 24 hours you should be able to make your redemptions. Then we also have that the returns is not subject to withholding tax. There are some instruments in Nigeria today, when you invest in them, you are required to pay tax. But for mutual funds, you are not required to pay tax on your return on investment. There is a preservation of principal investment with potential for capital appreciation at exit. So at all times, you are very certain that your capital keeps appreciating, it keeps increasing. Contrary to what you have in the savings account, you keep your 1,000 naira there. In the next 5 months, I can guarantee you that your money is no longer going to be up to 1,000 naira, because they will charge you bank charges, they will charge you SMS charges, they will charge you bank maintenance charges, they will charge you. In fact, they will even charge you for sleeping charges. That's what normal savings account does. So you find that your 1,000 naira in the next 5 months is no longer 1,000. Maybe it is around 700 and something naira, is around 800 and something naira. In mutual funds, you won't have that kind of scenario. What you would always have is capital appreciation. You have 1,000 naira today, tomorrow your money is 1,010 naira, next tomorrow 1,020 naira, depending on how much the market is doing and how much yield you're having on your investment. So these are, part of the features that you find applicable to mutual funds, or what we call collective investment scheme. And on my screen, we have that currently the money market fund is yielding very, very high, as high as 22% year to date return, plus or minus 6% net of all fees. So because the mutual fund is dependent on the performance of treasury bill, you'll find today in Nigeria, our treasury bill is really doing well. And most of these fund managers, they also take advantage of the federal government treasury bill, in investing some of these funds that they have in their mutual fund. And so they are able to give significant returns to the pool of people that had invested in the mutual fund. So that speaks to the benefits of mutual funds. So we look at it, some types of mutual funds. We have the professionally managed funds, which are the mutual funds that I've mentioned. We also have the exchange traded funds, which are also another form of collective investment scheme. I won't dwell much on these. So I want to also explain some common mutual funds that you can take advantage of in the market. The number one of them is what is called money market fund. The money market fund is very common. If you maybe punch money market fund on your browser today, you would find a couple of investment houses in Nigeria that has this product. What they do is, if you invest in this money market fund, the fund manager that is responsible for managing this fund will invest it predominantly in money market instruments. If you are investing in Wealth for Women Fund, it is also different. The trust deed that is attached to each of these mutual fund is different. So if you have 4 different fund managers, for example, fund manager A, B, C, and D, and each of these fund manager is managing each of these funds. So fund manager A that is managing money market fund may be able to invest in certain parts of the sector, but fund manager B, which is in charge of the Wealth for Women Fund, may not be able to invest in that part of the sector, because for each of them, their trust deed is different and their return on investment is also different. The Sukuk fund that we can see on the screen is very common or popular in the northern region, because the way the Sukuk fund works, it works differently from the way the Wealth for Women Fund works, and it also works differently from the way from the way money market fund works. So if money market fund, for example, is returning 10% year to date per annum, the Sukuk may be doing 15% year to date per annum, because their investment instruments are really, really different. Let me also point out the Wealth for Women Fund. So, Wealth for Women Fund invests in both money market instruments and stocks of companies with significant female representation on their board and management. So, any fund manager, for example, that is in charge of managing the Wealth for Women Fund will only be allowed to invest in companies that has significant female representation. So that is the trust deed that is attached to that particular, mutual fund. So as an investor, if you are this investor that wants to empower women, you want to do more for women, it may interest you to invest more in Wealth for Women Fund than it would be for you to go for the money market fund, simply because of the trust deed that is attached to that particular mutual fund in questions. So that explains why you would always have, different, mutual funds offerings in the market. We also have the fixed income fund, you have the equity fund, you have the balance fund, you have the global fixed income fund. The global fixed income fund and the Eurobond fund are done in USD. So for some investors, if you don't want to no longer invest in Naira, you have some free dollars. Maybe you have a rich uncle, or you are working in a multinational and you are being paid part of your salary in dollar. You don't want to dilute this dollar. You want to preserve it. You can, explore investing this USD in the Eurobond fund or the global fixed income fund, while your money is secure, safe and secure, you are still earning returns or interest on them. And that speaks to one of the advantages of taking advantage of these mutual funds. For equity funds, so equity fund invests mostly in equities that are listed on the Nigerian stock exchange. We have a lot of people today that wants to invest on the stock market, but they are scared. They don't want to lose money. I could remember the first time I invested in stocks back then. I bought a share, maybe for example, worth of 10,000 naira today, and in the next 1 week, you go on your account, you check the value of your stock is no longer 10,000 naira. It is now 5,000 naira. You are scared. So a lot of people are in that position where they cannot take the risk of investing in the stock market. So if you are looking for a safe way to invest in the stock market, your best bet is to find a fund manager that has equity funds and invest in that equity fund. So you leave all the stress of stock selection to the fund manager. So the fund manager will be in charge of looking out for stocks to invest in. They will know the right time to enter, the right entry point. They'll know the right time to exit the market. So they do all of that work for you. At the end of the day, any profit they make, they share accordingly based on how much you have contributed to the pool of that funds. And so that is the trust deed that is attached to equity mutual funds. Okay, so that explains that part too. So it's very important for you to identify your financial priority. You should know your investment objective. You should know your time horizon. You should know your risk tolerance. So for somebody that is risk adverse, maybe you are very scared of taking risk. You don't want to put your money in equities, mutual fund, because in equities mutual funds, the trust deed that is attached to it invests predominantly in stocks. And stocks is a high risk endeavor. So you also need to know your risk tolerance before you select which of the mutual funds you want to invest in. You also want to look at your time horizon. So in terms of time horizon, I could explain it in this way. There is what we call the minimum lock-in period for mutual funds. For money market fund, in most cases, it is 30 days. So when you are investing today, you would always be encouraged not to have access to your funds till after 30 days, the first 30 days. What it does for you is, if you want to have access to your funds before the first 30 days, they will allow you, but you'll be penalized. Part of your interest accrued, not your capital. Part of your interest accrued is going to be penalized if you are having access to the funds before the 30 days locking period. And there are some funds, for example, the Sukuk fund has a locking period of 90 days. So when you are investing in January, you should have at the back of your mind that you won't touch that money till at the end of the first quarter. That's March, at the end of March, 90 days locking period. That way, you will not be penalized and you will not have part of your accrued interest going back to the fund manager. So you need to be sure of your time horizon, how much you are willing to let the money work before you select a mutual fund and invest in those instruments. Very, very critical and important. Then some of the things you also need to consider as an investor looking to invest in money market fund, looking to invest in equity funds, are what we have listed below. The capital preservation. You need to seek investment instrument that will ensure your capital is safe and secure at all times. Nigeria is already very difficult and hard, so if I'm investing, I need to ensure that I'm investing in an instrument that will not take away the little I'm able to save. So at all points, you are sure that your capital is safe and secure. You also need to look at the risks, evaluate the risk level of the instruments that you are investing in. You also want to look at the fund manager's expertise. Some very popular fund managers in the country that you can be sure of are United Capital PLC, one of them. You can be sure that they are going to manage your fund professionally. You are certain that Stanbic IPTC is a good fund manager. You are sure that ARM is a good fund manager. You have Norembeja and the likes. So you don't want to go and invest your money in MMM. You don't want to go and invest your money in all these Ponzi scheme that want to portray themselves as a fund manager. So it's very important for you as an investor to look at your fund manager's expertise before you invest in any products that they have. Then you also want to look at the liquidity of the funds. So in my earlier explanation, I mentioned that investment instrument works slightly differently from how your normal savings account works. In your savings account, you can log into your
Sammy, you have
application.
5 minutes more, please.
Thank you very much. You can log into your application, you can make your transfer instantly, and then you have access to the funds. In money market fund, the minimum period that you will likely have access to your fund is 24 hours. And even the 24 hours range, depending on the house that you are dealing with. There are some fund managers or some investment outlets that if in 1 week, in 2 weeks, you still haven't have access back to your money. So you want to be sure that wherever you are dealing with has that liquidity to support your needs. Regulatory compliance, you want to be sure that they are well regulated. So SEC is a very, fundamental regulator in Nigeria today, that you want to be sure your if any investment house you are choosing is being regulated by SEC. You want to look at their fund or size under management. You want to look at their historical performance. You want to look at some of the other investor services that they do. Good thing is we're going to share this presentation, after this particular webinar. So I mentioned earlier that you need to also consider the regulatory framework that is guiding any investment house that you want to invest with. The Securities and Exchange Commission oversees mutual funds or collective investment schemes operation. And this ensures that there's a transparency, there's fairness, and then there's accountability. So you need to be sure that anybody you are investing in is regulated by SEC. So it's also important for us to mention some of the red flags to look out for in hearing mutual funds. So when somebody comes to you and they said, we have mutual fund projects, come and invest this and that, that and this, there are some key things you also need to look out for as an investor. Number one is look out for how they write their information on their investment products and their businesses. So when you see any poorly written information on the investment product and the business, it's a big red flag. When you see a vague or overly complicated explanation of how the product or how the business runs and how the money is made, if it is not clear, like you are not really sure how do they make the money, it's a red flag. Run for your life. If you see high or unrealistic return in a short period of time, so they are telling you invest in 24 hours, you have 1 million naira in 24 hours, you have 2 million naira in 2 days, run for your life, because return on investment is usually a function of the principal amount and the tenor. So if the tenor and the amount you are bringing on board is not corresponding to the return they are promising you, so you are giving a 10,000 naira and they're telling you will get a return of 20,000 naira in 2 days, that is a big red flag. It doesn't work anyway. So your return on investment is an indication of the tenor and the principal amount. So when you are seeing a high unrealistic return on investment, it is a big red flag. And most importantly, when they are not registered with Securities and Exchange Commission, it is a big red flag. So all mutual funds are meant to be registered by the Security and Exchange Commission. So some of the questions, our popular question is, what is the minimum amount that I can start with? You can start with as low as 10,000 naira, and you can top up your investment with multiple of 1,000 naira thereafter. So the entry amount is very small. With 10,000 naira, you can have a mutual fund account. Can I withdraw from my investment at any time? Yes, you can take out from your investment and you can top it up anytime you want to. And this can be done seamlessly. There is usually an application that allows you to do this depending on the investment house that you are investing with. So for United Capital, they have an Invest Now application that allows you to, top up your investment from the comfort of your room, and for you to even take out from it from the comfort of your room. So very important. How do I proceed to set up my investment account? You can set up your investment account by filling an easy and seamless one-pager form. So for most investment houses, they now even have an online platform. You don't need to fill any paperwork. Just go on their website, put in your details, and then your account should be active in no less than 24 hours. So how do you get started? So I also have that before you get started, you also need to be sure that, because choosing your investment outlet is extremely important, you want to be sure that they have the time, they have the skill, and they have the energy for the job. And that is why we recommend you use a professional company like United Capital PLC. They are the only investment banking firm that is listed on the floor of the Nigerian Stock Exchange. They have a strong presence in Nigeria, in Ghana, and in Cote d'Ivoire. And aside from mutual funds, you also have opportunity to do a whole lot of things with them. Securities, stock brokerage, trustees, asset management, digital bank, wealth management. All of this you can be sure you would be able to get from them. Some common KYCs that you will need to open an investment account are, an opening account, your tax identification number. It is optional. It is not very important. If you have it, it is good for you to provide it for them. A copy of your utility bill, which is your NEPA bill, and any valid regulatory ID card. These are the things you need to open a simple investment account. And the
Sammy,
key.
at this
Oh,
point,
my
your
my time is
time
up, right? Thank
is
you, thank you
up.
very much. Thank you very much for listening. Anyway,
Yes,
I
please.
believe we are able to get one or two things from my presentation. Thank you, everyone.